Hello, trading is closed on December 28th, 2020. Story disclaimer, go over some calls. It's my trading plan for tomorrow, December 29th, 2020. If we gap smartly in the undesired direction, calls kill before the open. No guarantee at all that I'm right, so trade at your own risk. My email is mejt.trades@gmail.com. Please remember the rule that you're not supposed to make a market call without the reason. Someone did that after my last video. In the spirit of the season, I'm going to let it pass. But if you want to make a call without giving the reason, just don't do it on my channel. Well, here's what we said. We said it was historically a bullish week for the market, and if we dropped, it was big trouble. We could explain a big drop, but until it happened, couldn't be confident it wasn't in fact the top being in. And it was obvious before the open we weren't going to have a big drop right at the open. The count we had, as we've always said, isn't the only count. During the day, MEJT said ultimately lower prices would print. We got the minimum. System said it was false, wouldn't stick. We almost always get more than the minimum, which we did. Also said this, it also gave us a higher target. The system generates targets. It doesn't say which comes first, but it can certainly generate both higher and lower targets. Higher target, it also said wouldn't stick, and it didn't. So that's already played out. There are various counts here. We had this as a possible count. Never said it was the only one. It's an ending diagonal triangle. I think the further you go past this junction point here, the less tenable that count becomes. I think we're just going to assume it's wrong. Still, if we drop from here, I can explain it. But this argument, which was one of the valid counts, I think is most likely not the correct count. Now, the original count we had early last month, we were talking about a possibility of a blow-off top going as high as 39.20. That hasn't been invalidated yet, although we were threatened with invalidation here. If these lows had fallen, if they had fallen, which they didn't, I don't think that would have happened. Now, this isn't the only target either. I can explain a drop almost any place from here to there, 39.20. I'm not predicting it, but I'm not ruling it out. Some people want to know why I don't call these big moves overnight. Well, I never call moves overnight. Not my long suit. And this looks like a pretty positive move in the S&P. But since I make calls for a general market, not for individual stock, this isn't the only index. This is the Russell 2000 index. It's an index of smaller capitalization stocks. Broke out to a new high, dropped all day, closed under Friday's low. It's major divergence at a high. And certainly anyone who claimed the market was going to be up today and talked about the S&P was right. But if somebody wanted to say the market was dropping today, he could claim he was talking about the Russell and claim to be right too. Divergences like this are not things you want to see when the market's making a sustainable rally. It doesn't mean we reverse tomorrow. It doesn't mean we can't go higher on the S&P and lower on the Russell. But it's cause for caution. Tomorrow's pattern has the early high. Doesn't mean you won't gap down. Should be early low. Well, I'm glad I caught that mistake. I would never have heard the end of it. Tomorrow has the early low. We could gap up. Today we gapped up, hit a higher high, closed under the highs. Unless we gap and promptly overtake the high of the day, lower prices should print. Futures have already accomplished this, so it's not surprising at all if cash prices do the same thing. Volatility index, the old one, which I think is more reliable than the current one, has given a sell signal by going under its lower Bollinger Band and then closing over it. Sentiment indicators remain extremes, typically seen at market tops. The Russell diverged at the top and dropped under Friday's low after hitting a new high. Now, none of these are pinpoint timing indicators. This week is historically a bullish week, and there's no rule going to be broken if we rally through the end of the week. You could even rally into early next year. It's just that these things I've been pointing out are things typically seen at market tops, and unlike market lows, which tend to occur all at once, market topping is kind of a gradual process. When you see all these things happening, when you see insiders selling stocks so heavily, when you see the public buying stocks so heavily, when you see margin, the amount of money on margin to buy stock at such high levels, and you see non-confirmations such as we saw today with the S&P and the Russell, you really have to be on your toes. Again, it isn't a pinpoint timing indicator, but these are all things you see at tops, even if we have a blow-off top to as high as 39.20. For tomorrow, all we'll say, it's a pattern with the early low. I'm still cautious here, but I'm not calling it top, although I don't think it's that far away. In terms of time, I don't know about price. And that's today's call.